On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to Financial Compass with Mish Schneider. I am your host, Todd Schoenberger, and joining me as she does every week is Mish Schneider. She is the chief strategist at MarketGauge.com, as well as the founder of the Economic Modern Family channel on YouTube. Mish, what a week. We have so much to talk about because when we met last week, we were going into the long holiday weekend, and yet we figured we might have a deal in Iran. We don't. And now we're hearing word that there might be a ceasefire extension. I mean, it's all over the place right now, yet markets are still higher. What do you think about that? I mean, is Wall Street just saying, you know what? We're hearing more of these bullshit stories or over and over again. We're moving on. We're going to continue to bid higher.
Well, I think that is exactly what the sentiment of Wall Street is right now, is that tech is powering the entire universe, that whatever happens in Iran, at some point, there'll be resolution. People are ignoring the fact that our strategic reserves of oil are basically getting down to scraping bottom. So there should be a concern there where there isn't. And of course, then we have government participation. All of a sudden now we're hearing stories about drone technology after we had space last week was the hot thing. And so, you know, this administration will do anything to keep this market up. What happens after midterm elections will be a whole other ball game. I think that's going to be really interesting. But right now, they want the optics to look good because they know that the popularity has gone down of this administration because of the higher inflation.
Okay, makes sense. I mean, that's all we can say. I mean, we saw the PCE number come in today, but again, nobody seems to even care right now. Reporters aren't calling asking for quotes on any of the inflation readings because they think they're just temporary anyway, but markets continue to bid higher. There was one position, though, I want to get to because one stock that you have really just entered into and you had a great reason why is Robinhood. Can you tell the audience a little bit about it? Because this is a complete opposite of the commodities trade that you specialize in.
Well, it's a little bit related. See, Robinhood had really done well in the face of Bitcoin doing well. And now we could see that Bitcoin has actually been struggling here back under 75,000, trading at about 73. Last I looked, Ethereum back under 2,000. This is sort of surprising to me, but nonetheless, what's interesting about Hood is it's separated itself from just being about Bitcoin because you have a lot of young investors that go into Robinhood and speculate on all kinds of things. Of course, we know sports is a big deal too. So I think that what I started to see was there was a big spike up a couple of weeks ago on news that they were getting into banking, and not only getting into banking, but offering an interest rate of, I think, 4.25%, which is higher than what you're going to get in a bank. So that's attractive. And now they're talking about allowing people to use AI to generate trades. Whether that's a smart idea or not, I knew that that could come back and boost the stock. And of course, people are not maybe making money in Bitcoin, but they're certainly making money in other places of the market. I mean, if you're a young investor, all you have to look at what's hot, get in. And if you're smart, gets a big move, get out, or at least control your risk after that. And so I thought, Robinhood at $75 seems cheap. This is at least a $100 stock to me. So I bought it yesterday. And it came in this morning lower, and I was like, oh, darn. But I put my stop in, and this is where chart reading becomes super important because there was a tremendous amount of bottoms at around 73.50. So I figured if that broke down, I'd just get out and call it a day. But instead, I went to an appointment, came out and saw that it was trading at 80. So now I think this is really where the rubber meets the road. If the stock is going to hold up, it should not break down again under 77, 76. And I think it has the potential to go up to about 100. So there you go.
That's incredible. That would be one hell of a trade, that's for sure. But are you feeling that maybe a lot of the do-it-yourself financial services firms out there could also be potential buys? I mean, because it seems like this market continues to elevate. We not only see it with the S&P 500, but we're now seeing highs in the S&P 600, which, as you know, are the small caps. And so more players are coming in, more money is being traded, which has been great for this sector. But it's not just the big boys that are out there that are actually seeing all the trading. It's also these do-it-yourself places. Would you be, or are you bullish on the entire sector?
Well, I would look at a couple of places. Digital banks would be one. And the other, of course, is if you want to look at regional banks, because that is going to be impacted. And also you want to take a look at XLF, which is more of the big banks. So if you're taking a look at something like XLF, which is more of the big banks, but yet all of them, as part of their earnings, have done well because of the massive amount of speculation. They still have some catching up to do, which doesn't depress me, by the way. I rather see the little guys win than the big guys. But if you move over to KRE, which is more of the regional banks, which would include digital banks because they're symbiotic, it's doing better than the big banks. But again, it's not doing what the rest of the market is doing. If you look at IWM, of course, which would be the granddaddy of the US economy, that has made new all-time highs and continues to make new all-time highs. So I think what we're still seeing is somewhat of a bifurcation of the market, but we are starting to see, right, more interest coming into through not only the retail space of investing, but even consumers in and of themselves after dismal consumer confidence. I mean, like horrific. We're seeing even XRT, granny retail, start to do a little bit better here. XRT is clearing the 200 after looking like it was going to break down. But I think you and I talked about there were quadruple bottoms now at 77, and that could really elevate. So all in all, except for pockets of weakness here and there, I don't see how you can be bearish right now in equities anyway, or I should say in indices and some of the ETFs.
Yeah, I agree with that statement. And you talk about consumer sentiment. We've been seeing weak numbers for the consumer sentiment
Right.
readings, but at the end of the day, it doesn't really matter. The consumer still consumes. So you could say that you want them to, they're giving something in a survey, but they're still going out, they're still doing things, and we're seeing that in a lot of the numbers that are out there as far as earnings go. So moving forward now, we're going into June. You're closing out the second quarter of the year. I mean, it's amazing how fast things are going, but the war is continuing on. Are you at all fearful that if things start boiling up again, we have heard about a couple of slight military actions that have taken place over the last 24 hours, but this thing could get bigger and bigger. Are you concerned that the stock market is not going to be able to handle that type of a headwind?
Well, it really depends. I think this is where we have to talk about interest rates again, because probably more than any sentiment collectively is the sentiment that the Fed is going to have to raise rates. And I'm still not so sure of that. Again, maybe after midterm elections, we see something like that if inflation's still running hot. But right now, we saw a really fabulous reversal where yields were at the high, and now the yields are softer still. Now, they're still not back to the levels that they were even a month ago after we had that big sell-off. But I think that you have to watch what the yields do here. And I think that might be the catalyst. If the yields stay relatively soft, it has a domino effect. Not only is it good for the market, but then you'll start to see maybe more action in the banks, more borrowing, more small companies getting more active in terms of their borrowing because the interest rates or costs are so high. And our huge debt that is at a high interest rate to pay back, I think in some ways we're trying to inflate our way out of the debt, but at the same time, it would be a little bit easier for us to buy back our debt at lower interest rates. So that to me is key. If the interest rates can handle staying down here and we start to see them scream back up again, I don't care what's going on in the market. I think the next time it will have an impact for sure.
Well, that's the thing, though, and that's been the twisted narrative over the last week and a half, is that you have seen Treasury yields go up. We actually now talk about the 10-year Treasury. Now you actually have mortgage rates above 6% since the highest they've been since August. So, do you think the stock market's just ignoring what the bond market is trying to tell it?
I think at this point, I mean, besides obviously bonds and oil prices, with tech just doing amazing, like we've seen, the company that reported yesterday, Snowflake, for example, I mean, it came up like 20-30% today. The earnings season has, especially in the tech space, has really given people a lot of confidence that no matter what's going on from the last quarter, things are strong. So, we have to take a little bit of a pause here. Now we're going to have a whole new round of stats. We're going to start with unemployment numbers in June. Well, unemployment's been pretty good, right? Staying at 4.1, 4.3%. So if that stays relatively the same, and the yields don't necessarily go up or down, but just kind of stay here, and oil stays between that 95, 105, it briefly went down a little bit lower than that, but now it's back up closer to where is it right now? Let me just take a look real quick here, because I wanted to also talk about the metals and natural gas, of course. But right now you're seeing crude oil at 90. So if we can get that back through 95, which was the range, I think that would be something. But if it stays down here, nobody seems to care about oil at $90. So all these things right now are kind of status quo. So something would have to have a serious message of breaking. And so far, we're not seeing anything break.
Right, right. Well, let's turn the page to metals. You brought up the gold and silver idea before. So what do you think right now? We are seeing a little bit of movement with the metals on the upside. Do you see it continuing into summer?
Well, today was a very important day in gold, particularly if we're looking at the August contract of gold, because what we saw today was it break down under the 200-day in futures and then come right back above it. We saw the same thing in GDX, by the way, gold miners, if you're looking at that chart. That also broke down under the 200 and came back. And silver never really broke down that high, which means we still have that silver gold ratio that favors silver at this point. But what I would say is, I remember we were talking about you don't want to see gold break down under 4,600. Well, it did. Now that's going to be the resistance level. So I would give it a little time, but I would actually say this 4,400 level that we saw as the lows today, if that's the low, then you have an incredible opportunity to buy gold $1,000 under where the high has been. That's pretty good. I think that's pretty good. And then in the silver market, by the way, let me just get over to silver here. We have, I'm sorry, I like to give like real numbers, so I don't want to do this from memory. That's why it's taking me a second here to pull up my
Well,
chart.
the show airs live, and that's what the audience wants. So I know the audience appreciates.
And we could even talk about sharing charts if we wanted to at some point. But anyway, looking at silver never got down to the 200. And yesterday it tried to get above the 50 and it failed. Now we're seeing a lot of support around that 70 level, which is where I would think silver would have to hold. So I would like to see that get back about $78. So if gold gets over 4,600, silver gets over $78. And GDX, by the way, gets back over, let's say, 87, which really keeps it well above that 200. I don't know if I would boldly say the bottom is in the metals, but I would certainly be interested in buying with knowing where your risk is.
Knowing where the risk is. That makes a lot of sense to me. So let's turn to natural gas then. I mean, how much risk are investors assuming these days?
Well, I love natural gas, right? So, we've been talking, how many weeks now have you and I been talking about natural gas? So today,
many weeks.
Many weeks, many weeks. Well, because I'm a sniffer, I'm a sniffer. When I sniff a bottom, I become relentless. And today we're having a massive move in July natural gas. It cleared over the 50. Now we've been here before, just last week. But what happened is on every sell-off that we saw after it tried to rally, we've made higher lows. So you can say $3 is really your big support. And if you really wanted to drive it up a little bit more, you'd say, I don't want to see it break around 314, 315, which is where that 50-day moving average comes in. And at the same time, we got to clear over 330 because that was the high from last week. We clear over 330. Not only do I think the bottom's in, but I would certainly get excited about a bigger rally for all the reasons that we've talked about with natural gas. I mean, it just got too cheap. It's a great energy source. It's in abundance. And, like I'm not, I don't remember now if we said this before the show started or not, but we are really down to almost scraping bottom in our oil reserves, in our crude oil reserves. So a lot of attention and focus could go to natural gas. So there you go.
Okay, and then what about DBA? Let's start talking about the food trade. You've been big on sugar. You talked about corn before. Give the audience an idea of where you stand as we head on into the summer months.
Well, again, just like the metals, today could be the day. If you miss that first run up in DBA, we actually, we always take profits, right? So we rode it from 26.50 all the way up. We got out right once it broke under 28 in DBA. And now I have no position, but I'm looking at it. It broke the 50 yesterday. Now it's back above the 50. So I would probably give it another day. But if it holds this level, which is really like around 27.50, let's call it, where the 50-day moving average is, you have the tightest risks there because all you have to do is risk to under yesterday's low. And if you risk to under yesterday's low, we're talking about 27.30 something. So if you can get a 20-cent risk in something like DBA, I don't see any reason why this thing is not going to go back up to the highs and even higher. I don't buy that inflation is over and we shouldn't worry. I don't think we've seen the full impact of it yet. And commodities can be very volatile. Again, we've talked about this so many times. So my next trade might actually be in DBA. By the way, full disclosure, I bought GDX as well. So we'll see.
Okay, we will see. And I do completely agree with you on that inflation side because your narrative is the same as I think a lot of people on Wall Street are thinking is that, yeah, we just have not seen the numbers from the inflation standpoint that I think are going to be forthcoming in Q3 and Q4. But we'll see. We'll see what happens. Let's turn to the economic modern family right now. Lots of big things are happening there on this channel. And for the audience, go to YouTube, key in economic modern family and click subscribe. So Mish, I know that you last week you showed us a short clip. I know you have another one this week.
Yeah, and I definitely want to, let me get it up here and go full screen. Whoops.
And while you're doing that and you're going to the full screen, how is the economic modern family? I mean, are you adding more shows, more videos? I mean, give us an idea of what the audience can expect when they subscribe to your channel.
Yes. Well, what I'm going to show now is only an 8-second clip of transportation, basically doing the heavy lifting. And I was a huge fan of the Alien series movies. And the one where she's in that pile driver, I forget what the technical name for it, really stuck with me when she says to the alien, and she's protecting the little girl, "Get away from her, you bitch." I don't know if that was like the famous line from that movie, Sigourney Weaver.
Jeez.
Yeah, yeah. So based on that, we made this little quick 8-second clip where I want to show just so people could see what we're doing with the animation. But what's going on beyond that is now I'm doing, actually somebody called it Mr. Rogers Meets Wall Street, and I love that. So essentially what I'm doing is I'm speaking and teaching, and the characters are working with me. So the one that's going to be released over the weekend is me and Sister Semiconductors talking about FOMO and what's the better way to buy something that's flying, like, of course, SMH, her ETF, has been doing. So that's where we're going, more instructional, and then we do these little short clips. So we're having a really good time, and we're teaching people. So we're just continually trying to build the channel. And thank you, Todd, because you and your viewers have really helped us do that.
Good.
But let's have a little fun here. I'm going to share this. It's going to look black for a second, but it's all of 8 seconds. I hope you can hear it.
I can't wait.
All right, where do you want it?
So that's also from Alien. So that's transportation showing that her stuff is moving. Now that's unusual to have something that short, but I just thought for our purposes it would be fun to show something that short. So
Yes.
yeah. So that's the thing I wanted to show, but really make the point that it's fun. Most of them are longer than that, but it's educational, and it's only going to be a good thing for everybody if you guys can continue to give us likes and share it with your friends and kids.
And kids, and follow it on all of the socials as well. I know even on TikTok, you're very big on TikTok. And so it seems like a younger crowd is migrating to the economic modern family. And I think that's fabulous. And I'd imagine that's going to continue. So are there any other shows or videos or segments that you have coming out this week, next week? I mean, what's in the future?
Well, we definitely have a great segment, as I just mentioned, about buying support, understanding support and resistance using sister semiconductors as an example, and
Uh-huh.
in and then, I think we're continuing our financial literacy pilot series with the kids. That's really more of a tactical strategy, how to trade. Yeah, so we're just going to continue with teaching things that are timely, but also evergreen at the same time, with me instructing and the characters sort of helping us along with commentary, just to make it a lot more fun.
Outstanding. That's great. Mish, this is great. I know a great update on the markets as well. I do have one question for you. We got it from the audience. I'm just curious on your feeling on semiconductors. I know we're flipping back to the market commentary, but what is your opinion on semiconductors? We've seen such a great run so far this year. Do you believe it's going to continue?
Well, I think that, again, this is all about what's your risk point. When you're so far from an actual point of support, you have to do something else. You have to wait for some level of consolidation or a point of resistance that's solid to form, and then either wait for that consolidation to break down so it gets back to something more major, or wait for that consolidation to break out, in which case now you have new all-time highs, but you have a new level of support where the breakout of that consolidation is. And I think if you look at the semiconductors chart, as of March, we were under the 50-day moving average. And then it gapped up, and that was the day to get in. Now we're so far from that. I mean, just to remind you guys, that happened at 402, and now we're trading at 602. I mean, that's a $200 move. So to answer your question, it certainly doesn't look weak, but I'm not necessarily sure that's where I put my money. I just told you, I think the metals have bottomed. I think food has bottomed. I think you want to look at something like Robinhood or some of these other companies that I can certainly talk about on the next show that have a great opportunity with more of a basing action as opposed to something that's been in the nosebleed territory.
Right, right. And that's fantastic. And for the audience, too, so everyone knows, you can actually watch the show live on YouTube on the Crosscheck Media channel. And if you do subscribe to it, you are able to leave comments and questions. And we do from time to time, just like we just did, we will read those questions on the air. And Mish is fabulous at just answering them on the fly. So that's great. Mish, I want to thank you for joining me on Financial Compass. I can't wait to see you back next week. We will meet again next Thursday at 12 o'clock live, and I know it's going to be a blockbuster show.
Yeah, it'll be the day before unemployment, so we'll see.
That's right. The big jobs number will be rolling out that Friday. So we will give you a preview of that jobs report, and I know the audience will get a lot out of that. So, Mish, on behalf of Mish Schneider, I am Todd Schoenberger. Thank you once again for joining us on Financial Compass. Coming up at 2 o'clock live, I have a sit-down with Shana Sissel. She has a new book coming out all about resiliency on Wall Street. It's a must-read. You definitely want to hear what she has to say. 2 o'clock live. Until then, take care.
We're the economic modern family. Watch the flow. Market vibes tell you where the trends might go. We're the economic fam, guiding the scene from the streets to the screens to your trading machine. Tap in, stay tuned, feel the beat line, cause the market tells a story through the family.